at the market, we did see it hit a 12-month high on Thursday, but fell back on Friday's trading session. But the momentum still remains quite positive.
Absolutely. We're the third best performing index in the world in 2012. We're up about just over 18%. It's been in a bull trend since the start of the year. I think we were very badly oversold in 2011. So some of this is taking back an egregiously oversold position. But I think, we've got another 400 to 500 points on this rally through year end. I think we're going to have a significant round of monetary easing over the weekend. The fuel price was cut nearly 8%. So we should see single-digit inflation next month. And essentially, I think it's really being dominated by foreign investors who, on an Africa-wide level, I think were egregiously underweight and are moving from that egregious position to one which is a little bit more normalized. And that's creating this buy-side demand, which has sustained us throughout 2012.
You did touch on this a little bit. We do have some companies due to report results, particularly in the banking sector later this month. What kind of results can we expect to come through from the banking sector?
Well, obviously it's been an incredibly tough period. It's practically been a laboratory experiment with prime rates around 23 to 24%. There has been very little growth in the loan books, but net interest margin, NIMs, have been at the widest they've ever been, as far as I'm aware. And I think you're going to see some contraction on that side, but you're also going to see significant expansion in the second half. I think the banking sector will outperform street estimates, which by my estimation are looking for between 5 to 10% profit growth. And I can see between 20 to 30%, likes of KCB above 30%. So I think we're going to get surprises to the upside, which will sustain this move higher.
We had Citigroup last week coming out and saying that investors should be a bit wary with the Kenyan banking sector. Should investors be concerned? But you are pretty positive about the sector.
I read through that report on Friday, and first of all, Citigroup are an interested party. They're a big player in the local banking scene. They predominantly focus on corporates, but they're a significant player. They were essentially questioning mark-to-markets of bond positions that banks were holding and the shuffling of bond positions from a trading book into the hold-to-maturity book. This issue has been out there for some months, and I think essentially if you look back over the period in question, in single years you might have issues, but the smoothing process over the last 5 years means that this was a little bit of a scaremongering report. I, for one, think the banks are well managed. They have very healthy margins, and I think they're going to surprise us with the profits that they're making. There's nowhere else in the world that has these kinds of margins between deposits and lending rates, and there is an issue about it, a political issue. It keeps getting raised in Parliament, but nevertheless, the banks remain well protected and highly profitable.
Banks remain quite positive on that end. Looking at the inflation outlook, like you said, coming in at 10.05% in June, likely to fall to single digits, really on the back of that the price cut in fuel prices. Could we see price cuts coming through going forward?
Absolutely. I think, the inflation rate's going to fall maybe up to 200 basis points on the basis of this fuel cut, and a number of other dynamics. Lower food prices, better rains have been very helpful. And essentially, we're going to have to move from this very extreme, ultra-high interest rate regime. And I think participants have not yet priced in the amount of monetary easing that's going to come. The world over, everyone's lobbing funny money at the system. The US is bound to bring in QE3, and I think in a world of that's operating on that basis, our interest rates are way too high, inflation is coming lower, and I think we'll continue to see money park itself in the Kenya money markets, looking to reap these double-digit interest rates that you get if you put your money here. The shilling has been very, very stable after an incredibly high beta 2011. We've traded in a tight range. It looks very solid to me. It's outperformed the rand, the rupee, and I think the policymakers are going to bite the bullet and ease another 450 basis points before year end.
That is quite bullish. We did see you coming out on CNBC saying that you would like to see a 200 basis points a cut at the previous meeting, and 150
Yes.
basis points came through. Let's look at government paper at this stage. How attractive is government paper, with some analysts really saying that we are seeing a shift from the fixed income market into equities at this stage?
I continue to expect a shift out of the fixed income market into equities. I think, it's very attractive. The equity market remains cheap against bonds. Bonds rallied hard in the first half of the year. They had a pause for breath. They backed up a little bit in the last 2 or 3 weeks. But I think given the inflation outlook, given the debt to GDP ratio, which is extremely low and would hit the Maastricht criteria with a margin, I think the bond market is going to look attractive again to investors. The government, I know, is tapping the 5-year and the 10-year, and that tells me that there is plenty of appetite for fixed paper. I, for one, see a second half rally in the longer term tenors, but nothing as substantial as we saw in the first half.
Aly-Khan, let's just look at the week. We did have the bourse falling back, which was on Friday. But what kind of trade can we expect coming through for the NSE? It has finally reached that 3,800 points mark.
Yes, I think we should see a constructive week this week. I continue to see the bourse as being constructive. I think it's been dominated by foreign investors. And what I'm noting is that we're seeing lower turnovers in the last few days, which tells me that these price points, we're seeing some supply exhaustion, which leads me to feel that the next leg high is imminent. It might even happen this week, but essentially I think we are in a bull trend. It's been a rock solid trend throughout this year, and I continue to see it gaining traction and momentum towards 4,200.